Chris Wilhelm and welcome to my weekly video blog. This week we take a look at interest rates. That's right, interest rates. This past Thursday, European leaders announced a comprehensive aid package to help stabilize what's happening in Greece and also stabilize their current banking situation. Wall Street loved the information. The Dow Jones Industrial on October 27th closed up 339 points. Now you're saying to yourself, what's this got to do with interest rate? Well, here it comes. The 10-year bond, where mortgage-backed securities are traded as well, was down over 20 basis points in one day. Here's a little history for you. If we go back to September 23rd, the 10-year Treasury closed at 1.73. Today it closed at 2.40. So in a matter of 30 days, we've seen the 10-year Treasury lose over 5/8%, and we've seen interest rates back in September go from 3 3/4 up to 4 3/8, trending towards 4.5%. Why is this important? Because there's a lot of people out there looking at homes that still think the interest rates are below 4%. So we want to make sure we pass this information on to you so you can let your buyers know interest rates are on their way up right now. Certainly we think long term, or at least the next 90 days, rates will stabilize, but I don't know if we're going to get below 4%. But more importantly, it's a matter of letting your clients know what's happening with the market, because as we all know, we don't control it, and it's such a worldwide market right now that being, as far as financially, it does have an impact on what happens right here at home. Here's a neat website you can pass on to your buyers that gives them an idea of where interest rates are set from. They kind of try and break it down to make it simple, some things they can watch for. I know I've passed on a couple tips before on my blogs, but this is a pretty neat website. Check it out, www.yourrateexplained.com. So again, pass that on to your buyers. You even check it out and let me know what you think. Back. I want to give you an update on USDA. We reported a couple weeks ago that USDA was not funding loans. They were still underwriting loans, issuing commitments. They just weren't funding, which the terminology means insuring the loan. So no lender's going to close a USDA loan without full insurance. And they were operating under the continuing resolution. Well, we received an update from Neil Hayes, our county director, that inside the continuing resolution, which goes right through to November 18th, they did include for funding up to $24 million. So whatever comes first, November 18th or $24 million, USDA is still funding loans. So that's some good news. So I know there's some buyers out there looking for it. I know some of the agents actually market the USDA. So we'll keep you abreast that if anything should change, whether they run out of funding, because certainly this information changed dramatically from what I reported a couple weeks ago. But hey, what are you going to do? It's an ever-changing world. As always, we appreciate you tuning in, and we'll see you guys next week.